Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts and going over data. And so here we are looking at NEO, ticker symbol NIO, which closed on the day at a price of $4.72, being up just over 10.5% on the day and more or less being flat in the after hours. So I wanted to follow up on NEO because of this big move. I do think that we closed at a pretty important level, but I think we also closed below a pretty important level. So it's quite possible we could be seeing a pullback over the next 2 days of this week, but I do think it could be set up to move in the coming weeks, if not continuing into the end of this week. And that's really going to be based on not only the chart, but also Max Pain and some data from Unusual Whales. So I will go over that towards the end of the video. First, going over the chart here for those who are not interested in that stuff, but I do think it's a lot of interesting, useful data to be considering. So I would recommend sticking around. But anyways, looking at the chart here, couple levels that do stand out to me. One is this blue line here. That is the 200-day moving average. That is at a price of $4.75.1. And we did hit a high today of $4.76, just piercing that 200-day moving average, but getting rejected from it. So I do think that is, not such a great look, but we did close above the high from over here from February 21st, which was last Friday. We put in this big wick inverted hammer candle and we pulled back actually to fill this gap that was formed over here. So I do think that was good, and that was the low from yesterday. So Tuesday, February 25th, we hit a low of, let's see, $4.25 with that gap at 4.26. My alert went off, and I think I maybe added there, but if not, that's fine. I did actually add some today. Anyways, with this big wick up here, getting back to it, the high from February 21st, that was at a price of $4.69. And I'm going to put a line there just because, I think it's an important level. Also, I think it's a fun level for 69. Got to have fun with it. And so I'm just going to make that a light blue line just because I like that color. And we closed above that level. So I think that's good that we're showing some strength, but it could always be a fake out in that we do see a pullback to maybe retest the tops of this consolidation right around 450, which is another important level I'll get to in a minute. But, I could see that happening. But if we do continue with this momentum, get 5% up tomorrow, I think that we could really be starting to move in the coming weeks. But like I said, I think pull back to 450 this week does seem like it is quite possible. Because we did get higher than this high of 469, I am going to adjust this Fibonacci retracement to get up to that high. Let's see. Of $4.76. I'm just going to make sure that is marked just right there. And so we can see the 50% retracement is going to be coming down to around $4.40, right around there. But I'm actually going to add the 382 because I think that could correspond very nicely with the tops over here, like I was just talking about. And that looks like it's at $4.48. So I would not be surprised if we do see that pullback this week. And also, before I do delete it, just want to point out this little doodle of an arrow that I had drawn up here, suggesting that I thought that we could be pulling it down to fill this gap, retesting this light blue downtrend, and then going higher. Unfortunately, it took a little bit longer to happen, but we did pull back to fill that gap, as I had mentioned, that being at $4.26. We did not get to that light blue downtrend, but that's fine as we have bounced, and I think it is looking really good. So I think that's more or less what I wanted to talk about. Oh, no, actually, I wanted to talk about some of the data down here. So we do have, the volume data right here. And so I think that this is looking pretty good. We did have a pretty big spike in volume on the 21st, so last Friday, but that was a wick up and then a pull back down. So we didn't hold above that level. And so now what we are seeing is a close above that high. So number one, that's looking really good. And also two, that's backed by more volume. So here on the 21st, we saw a volume of 101.15 million shares traded, whereas today we saw 120.57 million shares. So that's looking really good. And then just in the time frame in the picture right here, that is the highest volume we have seen in quite some time. And actually, if we do scroll back, let's see, we did get some higher volume over here, 123.19 million, so about 3 million more shares traded over here. But that is when we were at, let's see, hitting a high of $5.36, so being notably higher than where we are now. So if we do keep that volume going higher, I think that we could be seeing a breakout at least to, be retesting the highs that we were hitting on October 28th, being at a price of right around $6. But as I have mentioned, I do think that this could be heading up to around 7 or possibly 8 in the coming months. But I do think, like I said, there could be a pullback to around 450. And the reason for that, if we do switch over to unusual whales, that is going to be because of the max pain for this Friday, which is $4.50. And since the stock price is just above 472, I think that this is probably a bull trap to get people to be going long a little early, which has been me basically this whole time, because I think that there is going to be like this 200-day moving average, like the high over here. This is just one close above it. I think that we will be seeing some efforts by market makers and whatnot to push this down to that max pain right around 450 or 448 there. So I would be prepared for that, but then the following week's max pain is $4 a share. And so to revise my little arrow doodle, what I could see here just over the course of the next couple days, pull down to here, and then maybe do something like that. So we will have to see, and I might actually redraw that, just try to get that arrow to be a little bit nicer. And I think I was a little bit too slow with the move coming down. So that should be about 2 days. And then let's see something like that. And let's try to get a nice arrow point there. So yeah, that looks pretty good. That is what I am thinking what will be happening. So do be prepared. Don't be frigging out if we do pull back to 450 this week. That's still above the max pain for the following week. And I think that that is just a short time suppression before this really starts to move following this breakout from this downtrend. But anyways, coming back over here to unusual whales, I wanted to go over some of the premium data because what we can see here for the day of February 26th, as I am recording this after the market has closed, we saw premium traded today for this, let's see, I believe for this, for all contracts, $16 million traded, but a net premium increase of $3.5 million. So quite a lot there. And if we do look at the chart over here, we see the stock price in yellow going up with a lot of volume behind it. In green down here, net put premium staying more or less flat. So nothing bearish there. And what we're seeing with the net call premium is just steadily going up over the course of the day. And actually a little blip, a little jump here. So I'm kind of curious about that, but I haven't looked into it. But generally, just gradually going up over the course of the day. And what we can see, these numbers over here, net put premium came down by $328,000 versus net call premium went up by 3.19 million. So quite a lot there. And if we do look here, just above my head, we see that bear bull slider, 57% on the bullish side. So looking really good. And then also just to add some perspective to this, I think it's really good to be looking at these charts over the longer time frame. And so looking over the past 30 trading days here, we can see that we have not seen more than 3 million net call premium traded in this, or net put premium. We can see over here, we saw these spikes in the net put premium. That was 1.66 million, and over here, 1.8 million. We are effectively double that with calls going along. So looking really good. So I am super excited about this. And then now I did want to look over at some specific contracts. These are ones that I personally hold, but definitely no recommendations or anything like that. Just wanted to get into the changes in the open interest because they do suggest that there has been a good amount of buying. And so this is one I did not initially have my eye on, but I did see some buys earlier on months ago when I was doing the highly regarded options theses. And so this is the $10 call that expires in May, so about 79 days to expiration. We can just see the little dots there is the average fill, and that premium was going up over the past, over the day. But then here, let's look over at the past 45 days, or let's actually look back past 90 days. So we didn't really see that much on this contract until over here when it was spiking. And then following that, we did see this pullback. And so with that being said, I'm just going to scroll down here to look at some of the increases in premium because I'm curious if these were buys over here. So that would be on December 9th and 10th. So let's scroll down here to December 9th and 10th. So what we can see is on December 6th, there was an open interest of about 2,600 contracts open. Then we saw a volume on December 9th of over 40,000. This is actually what put it on my radar. Over 40,000, almost 41,000 in volume. That open interest on that day was still reported as 2,600. But then what we saw is from this nearly 41,000 contracts, we saw an increase of open interest going up by 31,000. You can see that open interest going from about 2,500 to about 34,000. And then the next day on the 10th, we saw another lump of volume, 36,000. And then that open interest going up by another 24,000. And so so we've got about 58, 60,000. We see another 9,000 added. So this is, a good amount of contracts right around here on the 24th, just before Christmas. About 71,000. And I should note that associated with the volume traded on these days, that was over $1 million in premium traded on both of those days. And so let's keep this in mind, right around 70,000 contracts. We do scroll forward into the future. It did go up a little bit. It did go down a little bit, actually to 60,000 or so. But let's keep moving. Let's keep going forward. We are currently at like 62,000. So of those contracts that were bought back here, that was initially open interest at 2.5 thousand. We're well above that. So I think that's still, pretty bullish. And that's considering that on those days, the average fill for this premium was around 39 cents, or on the 10th of December, right around 33 cents. The average fill for this premium now, if I just flip back over to the 1 day, is, 13 cents or so. Over the course of the day, 11 cents. So a super discount relative to what we're seeing back over here. I could probably just flip that over to 60 days. Let's see. Yeah, so 39 cents. So that's a potential for definitely a 2 or 3x. If this was a smart trader, it's possible they are an idiot and they're going to lose all of that, millions of dollars. So of course, good to consider that. It does seem like they were wrong so far, but if we do start to break out, I think that we could really be seeing some nice moves there. And then also did want to look at, let's see. Well, actually, before I get to the other two contracts, I did want to point out that just recently, just looking at the data down here, on February 25th. We did actually see that the open interest increased to 62,000 from 60,000. On the 24th, we saw a volume of over 3,000, and that led to an increase of over 2,000. And so, yeah, about 62,000 there. So there has been some recent buying. So that does look pretty good. Although there was some recent selling over here that did bring the price down from about 63,000 down to 59, but we are back up to around 62,000 contracts that are still open. And with the massive amount of volume here today in this contract, this actually seems like it's a pretty exciting contract, I must say. I'm kind of proud of myself for, spotting this one. But with the data that we're seeing over here, that I was just going over here, all of this right back there, so flipping over to the 1 day, see this going up. That's a lot of buying a call. So I'm guessing that we're going to see open interest tomorrow right around 64 or 65,000, because that, 3.4, almost 5,000 in volume is probably going to translate to buying of calls there. So looking pretty exciting. And then if we do flip over to this other contract, this is actually the first one that I started looking at, I believe because of, it might have been the spike over here. No, it's probably going back even further in time. I think it was actually, wow, glad I made this video today. It was probably because of this spike here or one similar to it. This is unfortunately all the data that I can get on this chart. And so that is based on, let's see, that the date is October 17th. So yeah, a pretty big spike there. Oops. And then if I do scroll down to look at this data, we can see October 17th. Yeah, we did see about 250, almost 260,000 traded on that day. And then the open interest going up by about 3.7 thousand contracts, getting up to about 4,200 in the open interest. And yeah, so that is, when this really just started to pick up. And so that was always kind of on my radar. We can see that there were some variations, and sorry, I'm going back and forth, up and down. So yeah, let's keep this in mind, 4,200. If I do scroll up to the top here, we are looking good. We're well above. Whoa, look at this. So on, let's see, January 28th, we saw a volume of 2,000 contracts representing about $47,000. So it's not a huge amount of money. It's not millions, but that did represent an increase in the open interest going from about 9,000 up to almost 11,000. You can see that increase there. And then another increase, similar size between the 30th with that volume there, 2,300 volume, and then the open interest going up by about 2,000 the following day to around 13,000 contracts. So again, looking good. And let's just see where we're at, 16,000. We saw another big volume day on the 21st, 2.8 thousand contracts traded in that volume on that day, which resulted in an increase of about 2.3 thousand contracts, and the open interest getting to above 16,000 open interest. So, still lots of buys. The open interest keeps increasing. So this also seems like a really interesting contract. And then the other one that is probably like a safer bet, but not as exciting. This is, and perhaps I should have mentioned this, I think I might have forgotten. This one that I just went over was the $8 call that expires June 20th, 114 days to expiration. Again, not recommending, buying any of these or anything, just going over the data. And so this other contract, this is one that's a little more boring because it's a leap. This is the $15 call that expires January 16th, about a year from now, so 324 days to expiration. And so, yeah, this one's just not going to be as exciting. But what we can see, which is a little bit exciting, on the 21st, we also saw about 6.7 thousand contracts traded on that day, which led to an increase in open interest of 6.7 thousand. So effectively, all of those were buys, boosting that open interest from 28,000 up to almost 35,000. And now that's where the open interest is at. So, yeah, I mean, just lots of data here. We're seeing if I do shrink this to, let's say, the past 14 days. Ooh, no, I want to do a little bit more than that. Past 30 days. Yeah, we see these pretty big. Let's see, this was on February 11th and then February 21st. Just went over that one, but let's go back to February 11th. This is red, so that is the majority on the bid side, so that would make me think that it's selling, but it's also at the bottom, so I would think that's a bad trade. So if we do look, scroll down to February 11th, we can see that there were 6,900 contracts traded on February 11th, which led to an increase in open interest of 4.6 thousand, going from 23,000 to 27.6 thousand. So looking really good there. Yeah, so these three contracts that I've been watching, went over them during the highly regarded options theses. And also, sorry if Ed's blocked any of this. Sometimes I forget that he's there. But, just coming back to the chart, I think that we're, exactly breaking out of this, but I do think that there's a possibility that we do pull back to 450, that there is an effort to bring NIO down to max pain. But if we get this momentum, it looks like, hey, we're up 3 cents in the after hours. If I do flip over to the 10-minute time frame, we're going up a little bit. And so if we can keep this momentum going, I think that's going to trigger a gamma squeeze, with this Friday's expiration of 450. But if we do get pulled back to around 450, I think we could start to see that gamma squeeze next week if this momentum continues higher and we close next week above 4. Possible the max pain could be changed by then. But yeah, I mean, I just think that this is looking really good. I'm super excited about it. And I just wanted to share with you guys because of, really just looking at this over $3 million in net call premium over the past 30 days. This definitely stands out to me as being somewhat unusual. And so I think that, by June, we could definitely be seeing, $8 a share. So I'm super excited about it. But, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot, and I hope you enjoy the rest of your day. Take care.